Welcome back to the RationalInvestor.com's daily brief. Woo-hoo. Uh-oh. Hey, this is getting a little bit concerning. Don't like to see everything getting all super uber overbought there on the histogram. That's usually a warning sign. Anyway, just going through the dashboard briefly before just getting the video started here, and then that jumped out at me. A little bit concerning. It doesn't look like we have to worry too much in the short term about any overbought or oversold conditions. If anything, probably the way that this histogram kind of looks, or excuse me, the breadth indicator looks right now. Wishy-washy, and I suppose you see that medium term getting up into that overbought zone. That's sort of that indication that, hey, things are getting a little bit too uppy there in the medium term. Anyway, welcome back to the show. We are now finally into the Fed window. Dun, dun, dun. We've been talking about this event over, I guess basically about the past week and a half, wondering how the market was going to act heading into this event. And unfortunately, it sure looks to me like this is sort of one of these buy the rumor, sell the news events. I mean, only time will tell, of course. But that's what it's sort of looking like on first blush. Hello, Nure. Hello, Nick. Hello, Sean. Yeah, good to see we got our sort of regular crew du jour in the hangout here. I actually had a fun conversation with Ahmed in the day trader room this morning. We were kind of just watching things sort of waffling around. I threw on an ES short here off of this. So it's a pretty little triple top there. So we'll see how that plays. I'm up a whopping $10 right now. Woo, way to go. So should be a fun broadcast. It is Tuesday, but like I said, we are into this Fed announcement window. I get the impression that we're probably going to see the market just kind of go sideways through the day here as we get ready for the big Fed announcement tomorrow. Kind of like what I've talked to you guys about with regard to, I don't even know how to describe it. When I talked to you guys about, I'm losing my train of thought there. I actually don't like to have positions on while I do these daily briefs because I get all distracted. So you know what? I think that's probably the best thing to do. Let's just close this thing out. Yeah, just get out of there. All right. Anyway, took a couple of bucks. Win. Way to go. Woo. Now watch the market collapse. Anyway. Okay. So as I said, we have Fed coming up tomorrow. Probably all eyes are on the US dollar index right now. Interesting how all we really did through all of this was just a good old GAN 50% retracement. I'm showing YouTube as just a big circle-y circle. Are you having problems over there, Chris? Am I still connected? All right. So FYI, for whatever it's worth, that's what I'm seeing on my screen. So I don't know whether that's an error on my part. Hey, there we are. Now we're back. All right. Anyway, hey, look, there's some people that popped off over there. Watched Money Masters recently, blew my mind. Hey, there you go. There you go. How do you pronounce your name, sir? So it's a Faye? A? Anyway, yeah, it's very educational, isn't it? And unfortunately, that's the kind of education that once you learn it, you can't go back. And, I have corrupted you, and I have a bad habit of doing that with people. Is once the wool has been removed from your eyes, it's like, oh, this is what the real world looks like? Yuck. Oh, well. All right, so point of the matter here, US dollar index appears to be heading lower, trending actually, as you can see from our moving average system here. We've been trending down for quite a while now. It's a bit of a surprise, to be honest with you. We were rah bullish. I think if I understand correctly, the Europeans have come back with interest rate increases, and keep in mind that a good 30-40% of the of this US dollar index is European currencies, probably more than that, maybe even more than half. So I suppose if they're coming back and talking about raising interest rates, then that'll sort of balance things out a bit. So watching the US dollar, and of course, everybody's humming and hawing. What's the Fed going to do? Are they finished raising interest rates? All that kind of talk. I would probably say it's probably a little premature to declare the end of the interest rate conundrum. Actually, it was interesting yesterday. I really love this lounge because it's just a whole bunch of people all exchanging trading ideas, trading thoughts, different videos and stuff that were shared on YouTube. And I'm sort of agnostic when it comes to people's opinions. I like to listen to everybody. If I think that they're kind of full of horse hockey, then I'll say so. If I think it's a blatant shill, I'll also say that. But if I think there's good research, I will give them credit. Did watch this person's video. So, and of course, he gets tons and tons and tons of views. And of course, look at all that. I was telling the team, this is what we sort of aspire to down the road. Maybe one day our videos will look like this, but who knows? Anyway, there was a very interesting guest he had on yesterday. I can't remember the name of the gentleman just off the top of my head. But he made a pretty interesting argument for, we're looking for a big bull market in crypto to sort of kick in here over the next year or two. And, we often do things like the first 2 week study and where we are on the economic cycle. I thought this was a very interesting conversation he had with regard to that. And then, and it was interesting. He just got to a fascinating chart, basically laying out the future of capitalism and markets and stuff. This chart right here and what he's sort of expecting. And then all of a sudden his computer went haywire. But anyway, so I would recommend, I'll even throw it in the lounge. I thought this was really worth a listen. I think these guys got a half decent head on their shoulders. And Nick, I think you're in the, there you are. Yeah, actually, Heinrich Zeberg. And I replied to you, Nick. I sent a bunch of, there you are. Yeah, you said thank you. I even followed him on Twitter. I was that impressed with his work. So definitely worth a listen. So anyway, I shared that with you guys there on the YouTube video feed. If you want to, I think it's probably worth a listen. I thought this was an interesting image. This is crypto total market cap. And if we sort of think that we are in that bottoming phase, I don't know whether we move up this quickly, but I could definitely see over the next, year or two. And I think he even says here, 5 could be here or 5 could be here. And I even posted that I thought that one of our site principals, Julian, who does the daily briefs on Thursday, he's a really big fan of Elliott Wave. So I actually thought, this would probably resonate really well with him. Anyway, I doubt it's going to be this clean and simple and just zoom straight up and, hey, we're all rich. Markets don't usually go that way. Notice the saucer bottom of this bottom. And if you go back to the previous one, it was the same sort of thing. This is usually how markets like to bottom. So I would be surprised if it was straight line up. But nonetheless, I do kind of like this thinking going forward. And I think I've said to you guys before, we have a document that I'm working on, sort of try to explain what the heck's going on in the world and why would Bitcoin continue appreciating. I don't see any end in this money printing. 3 out of 4 of these images don't show any pause whatsoever in the dilution of the currency. And I would make the argument this is the whole reason why Bitcoin was built to begin with, was to try and somehow offset this, basically destroying the standard of living. And if anybody who owns and operates with these fiat currencies, it is interesting to see that we're getting a little bit of religion out of the US, but look at the slope of this money increase. money supply increase. If anything, probably, because keep in mind, these are supposed to be the hegemony guys. They're supposed to be, all of these other currencies are all supposed to sort of derive their value off of this thing. So it does make sense that the Fed would try and sort of, get a little bit of religion when it comes to the money printing, but we're still well above trendline growth. I suppose if you listen to people like Chris's girlfriend, it's just easier to say Chris's girlfriend than DiMarcello Booth.
Miss Danielle DiMartino Booth. You were there.
Or
You're almost there.
DiMartino Booth. That was close enough. We should be heading into some sort of contraction. And then also, too, I had pointed out that there's one gentleman on sort of social media that I've been following, and he's been sort of going around to a lot of different real estate developments, and he's like, there's nobody living in any of these buildings. It's a bit shocking.
Would some of the econs that came out today kind of speak to that in terms of the housing
yeah, well,
prices?
yeah, actually, so that's a good segue. Not bad. Well done. Yeah, Chris is learning. He's getting better at this, eh? Econs tastes great. Obviously we've got the big Fed announcement tomorrow, so it's going to be a little bit difficult to put a lot of meaning on these. Notice there are major news announcements, kind of a lot of minor. Obviously wages and the workers, that's a huge sort of pivot for the inflation conversation. So you can see that they're sort of backed, taming down, if you will. If you have like month over month, quarter over quarter, all sitting around this 1% area, then that means that they've sort of got the whole wage inflation issue under control. Notice Johnson Redbook came out, still pretty darn hot. This was the number one thing that kicked off the inflation insanity, and that got Mr. Druckenmiller very, very upset. And of course, I'm a big fan of Stanley, where these stupid Fedster, bankster idiots had like 20% retail sales growth year over year, which is just stupidity. That's like fucking Banana Republic economies. Very irresponsible. So you can see that the Fed is trying to get in front of this whole inflation issue. They're trying to bring retail sales back down. Sitting 4.9%, still a little bit hot, right? We would prefer this to be in that 2 to 3% range, if you will. And you can see lower highs and lower lows. So hopefully heading in that direction. What I've heard is that maybe that especially I think that the Rothschilds, who basically own the U.S. banking and own the U.S. economy now, and of course, whoever the hell the Rothschilds are, Joey Diamond's obviously, and they're all the clowns from Goldman Sachs, all that stuff. They would they actually, I think, like to use Canada as sort of like a telegraphing instrument for interest rate policy. Basically, the current Bank of Canada governor, Thiessen, I think his name is, basically completely wrong, or maybe not. You've heard me go on about that in the past. Completely different message from what actually happened in the economy than what their sort of forecasts were. But point being that he basically came out and said, yeah, we might slow down our interest rate increases. Interest rate decreases, absolutely not even on the table. So I think that's sort of the environment that we're in right now. It's not really a question of are they going to cut interest rates, but just, are they actually going to slow and keep in mind, historically speaking, this has been a very, very steep interest rate increase schedule here. So a little bit of a historical precedent maybe being set with the current interest rate policy. And if anything, like I said, Chris's girlfriend probably, she's sort of under the impression that we've got to land hard here. Then, of course, there's also Mr. Barry, who's also saying that, And if anything, maybe. That's probably the best way to describe this. I would say the odds are probably pretty good that we have not yet seen the actual lows yet in the market. And of course, you've heard me talking about sort of Wyckoff check, Wyckoff distribution, I guess accumulation patterns. So back to the econs, as I said there, retail sales still coming in pretty hot. Here is Chris's home prices, and you can see market was looking for 6.5. So begrudgingly, yes, the number is coming down. It was 8.7 before, but still hotter than expected. That's the Fed's not going to like the look of that. Month over month, you can see that basically in line with expectations. This number, again, is coming down, but it's not coming down as fast as people thought it was going to. Then the whole home price index itself, month over month, same sort of thing, down 0.1%. But I've made the argument all along here, it's not going to be the US that actually is going to be leading us into the tank. If I understand correctly, I don't know whether we'll see it here, it is Europe that's going to be a bit of a problem. It is, and actually Europe is, the numbers are even coming in a little better than expected. It's things like Asia where it's going to be the economic problem. North America actually is set up demographically. We had the big problem in year 2000, and basically we spent the past 20 years trying to deal with this demographic problem, and now we're on the other side of it. I teach students in our education program the fear-greed cycle, and I think we're actually about 3 or 4 years into a greed cycle, which means I don't think you should expect a collapse in the U.S. economy. If anything, U.S. economy should probably lead the world higher. But it's going to take a while. This isn't going to be straight line at all. All right, so moving on, the house price index is still technically ticking higher here. Is this when does the emperor actually admit that he has no clothes on? As this gentleman says, they keep building more and more houses, but the issue there is there's nobody living in the houses. We get to the point where the Fed just keeps the pressure on, and those house prices start to break, then are you going to see some sort of mass flood of houses hit the market as the sort of investor class, if you will, abandons the horrible investment idea? I don't know. That's basically what this guy's thesis is. And of course, DiMartino, right? Booth. She thinks it's more about credit crisis going to happen in the auto industry. And keep in mind, last, in 2008, the American government had to bail out General Motors. So the auto industry definitely can play a catalyst here. Other econs that came out today, interesting. We did have Chicago PMI reading slightly better than expected. A little bit worse than the previous report. I would call that basically a wash. Conference Board consumer confidence came out a little bit weaker than expected. I'm not, I don't have a data print here to actually chart the data, so I can't really see what the Conference Board is seeing with regard to M's and W's in the data set. So I'll just leave it at that. Dallas, sort of, if you think about the whole sort of economic region around the southern border with Mexico, and what are the prospects of Texas going forward. You can see this is, I guess, services revenue and services index. So you either have manufacturing or you have service part of the economy. Keep in mind that with all the baby boomers retiring, a lot of services are probably going to dominate society going forward. So service indexes are probably pretty important. And if we look at the data set here, we can see lower highs and lower lows. So clearly the economy is contracting. The service sector of the economy specifically is contracting in the great state of Texas. One might argue, though, that this does look like a descending wedge, which technically is bullish. If we do break out through the top here, this thing could turn into some big ass ABCD pattern. And there are some people, like I said, that video that I made reference to, there are some people that are saying once this Fed cycle is over, and we've done lots of videos of the money cycle, we know that the money cycle is probably going to turn somewhere around the middle of this year. And actually, that gentleman in particular in that video that I showed you, he actually is saying that the market is using the 2-year note versus the Fed funds. I would actually, if I was talking to that gentleman, I would suggest you probably want to study the euro dollar market versus the 2-year US Treasury market, but they're very similar, right? Euro dollars, there's short-term corporate interest rate market. 2-year, of course, is a US Treasury benchmark. So point of the matter here is data coming out of this particular region in the US economy showing a bit of weakness. And if anything, like we said, the Fed probably wants to see more of this to try and get rid of that inflation issue. That's about it for econ so far. If anything, I kind of think that we're in sort of a wait and see sort of part of the market. Markets are gyrating up and down. I would almost even argue if we look at something like, let's go over here. We're in a really dangerous part of the market in that there's going to be a lot of people that are going to just simply say, trend line breaks, we're off to the races, new bull market. I'm a little bit leery about that kind of thinking. If anything, what I would prefer is you see where, this is my ABCD time tested bot setup. You probably heard me talk about this before. I suppose you could make an argument 1 low, 2 lows, 3 lows. If you wanted to front run the bot, I might even suggest that that's probably the level to be long there. And actually, what I would like to see is can we just walk back along this trend line and then maybe do something like that? As it stands right now, too, we are making a lower high here as well. So this is going to be very, very trafficy. So be forewarned. And then I don't like the fact that they're rallying the market into the Fed tomorrow. That's usually not a good sign. So we'll see. Only time will tell. It will probably take a few days for this to roll over. I mean, I don't see an NM top here just yet. Usually they do some sort of M when they're topping out the market, but I suppose like here, this was just basically a V top. That was a V top with a big F U move. And actually, if I'm not mistaken, I think this was around a inflation number that was released. So anyway, you know what? Actually, the best way to describe this market, I think, is actually our breadth indicator. So it looks like this. I mean, technically, we are actually sort of leaning to the bear side. Things are actually trending up right now. I almost have a bit of an anomaly where the medium-term momentum is so strong that the medium term is pushing over. As soon as this medium term exhausts itself and rolls over, then And actually, what was really interesting, probably a good dovetail, is if we look at the crypto market, it was fascinating to see how our crypto top 30 yesterday, with all the bullishness that we've been seeing out of the market over the past few days, really interesting to see how the crypto, we got up, we actually kissed the short-term moving average, but because, and this is exactly what I mean about the S&P 500, because we have this actual well-defined top up here, we come up and we kiss this short-term moving average, and then the crypto market just puked out yesterday. It was quite remarkable to see. I mean, big old thumping, boom. So if anything, what I'm kind of thinking now, and this is sort of the tweets that I was putting out. In fact, actually, if anything, this is what scares me a little bit about this is the message that I conveyed to the public. These two moving averages, and I'm hearing a lot of people talking about these two moving averages. So a lot of people are paying attention to this. This is your death cross and golden cross, the 50 SMA and the 200 SMA. This is off the weekly chart though, so I don't really subscribe to the idea that this is a death cross, golden cross. If it's off the weekly chart, that's supposed to be off a daily chart. So, I don't know. I'm not going to go down the rabbit hole of this. I think some guy on social media called this a super death cross and a super golden cross. I don't know. What I will say is, I went through about a dozen or so markets just looking for a scenario like this, and you don't see this very often, where the market is tanking and actually counter trend rallies right into an actual moving average crossing event. Very rare. Usually what ends up happening is these things cross and then you get the dead cat bounce, which checks the cross. Is this cross really for real? So that was a little bit of a surprise to me. And then also too, I noticed, if you just think horizontal support and resistance, clearly this is an important low here, especially with all these tails here. Every time the market came down into this area, it got bought up. Then same thing here. Every time it came down into this area, it got bought up. And then you can see they tried to do it again and then puke out. Bleh. And if anything, I think, well, no, I don't think. Actually, this might have been around the time when Luna started to blow up. That might be around that. Right on. All right. Geez, Chris getting good at these little segues, eh? They're pretty slick. I don't know whether Sjord wants to be known as Mr. Luna for the rest of his life or not.
It's okay. We will come back to that.
Hey, there he is. Never been closer, right? Anyway, what I would just simply say is as we're coming into this event, there is that horizontal support and resistance line. It's just above us. And then also, too, I thought it was interesting. There's this 4669 just floating just above us. So could we have a little bit of screwery all around this level, all around this area on the price charts here? It wouldn't surprise me, folks. It really wouldn't. You can see, this little screen capture. This is the daily chart. And the reason why I have to sort of be kind of neutral right now, I can't really be bearish, is look at this nasty bearish divergence here. Not only in MACD histogram, you can even see in the buying bars, the bulls are kind of waning here. And then, of course, RSI has like 3 lower highs here and a confirmed M. If anything, it does make sense why we bounced here. And actually, this is Sjord's favorite, one of his favorite studies, throwing the Bollinger Bands on an RSI study. And this is the 50-period moving average that the Bollinger Bands are sort of drawn off of, standard deviation-wise. And quite often when we come into that 50-period moving average, we actually bounce off of it. And I think that's exactly what happened here. So I guess the point that I'm trying to make here is that this is a major, major brick wall. And what I noticed, like I said, I went through a bunch of markets trying to find historical comparisons. I think I found one in the stock market. The only problem is, where the hell did I put it? There it is. So this is the Dow Jones Industrial. So notice big M top, notice dump, then rally into those moving averages. Of course, everybody gets all bullish here, new bull market, big W, rah, 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 into the moving average, and then bang, 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 rejection, and then puke out central. And I think that's kind of what Mr. Barry's kind of alluding to here in his sort of forecast here, right? We rally into these moving averages. It's a bit of a trap. People think we're breaking out. And then all of a sudden, bang, 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 see you later. And we just puke right out. So that's not the 50 and 200. Those are different moving averages. But I think it's a similar kind of story. So I'm a little concerned that people are getting a little too bullish here. And we have a major, major brick wall staring us in the face right here. We'll see how it goes. I wouldn't be surprised, like I said, because this horizontal support and resistance level is slightly higher than where we are. Those moving averages themselves are sitting right up top here. I wouldn't be surprised if there's some shenanigans around all of this FOMC. I mean, keep in mind, it's almost cliche in the market. And if anything, I was very interested in this because, I was almost to the point where the algorithm was going to have me go and buy positions back. So as I said there, I was quite interested to see how we kissed and then rejected violently off of that level. And the whole damn crypto market rolled over yesterday. It was quite remarkable to see. So if crypto is a leading indicator, that can't be a good sign, so, and the interesting thing about price action now is that if I look at Bitcoin, it's actually pretty simple. This is nice 2-bar, and actually it's interesting. It was prettier yesterday because these lows were right against this. What I would just simply say now is you've got your battle lines drawn. So top of the range was the high there, of course, the other day. Bottom of the range, notice my 13 EMA is coming up right against these lows. And this market bottomed right into all these tails here. Candle body lows or trade location. You've heard Brian talk lots about that. So quite simply put, now we have a bit of a counter trend rally. Remember I told you on that RSI study, we came up against the 50 and we bounced against it, which is pretty typical. That's usually what happens. But now you can clearly see if this fractal now fires, which means we trade through this low, which means we break through the 13 EMA, and you actually start seeing the market actually printing below here, I think our rally is done. For the time being, we're stuck in this trading range. We have this huge FOMC event happening. Really, to me, this kind of looks like it's going to carve out some big head and shoulders pattern here. So something along those lines. So don't be surprised. And also too, remember there's that horizontal support and resistance level up top. And there's Mr. Foggenbaum's 4.669. There's also the top of the parking garage just above here. So don't be surprised if we actually do something like that. That wouldn't surprise me either. The way that the algo is positioned right now, if anything, and with the fact, like when I have, this is a daily price chart too. When I have confirmed bearish divergences with Willie stupidly overbought like this, Chris, what am I supposed to do? Let's see if Chris has been working with me for a while. Confirmed bearish divergence. I'm a bull. What should I do? Anyone?
Shorted?
No, I'm a bull. I don't really want to short. Can anybody help him out? Thank you, Meg. Way to go, Meg. Meg, you got a microphone? Let's get Meg famous here. It says no. You really should cool your jets. So maybe I haven't been working with Chris long enough yet. Anyway, so the fact that we have the confirmed bear div, the fact, I mean, and then there was another person that was like, no way, man, we're full on bull. And I was like, have you seen what the market does following a Fed meeting recently? So, the market does not like these Fed meetings. And is this sort of a buy the rumor? Okay, the Fed's going to be done. And then what the hell's going to happen on the other side of this? Remember, I'm still a bull. So if anything, what I'm saying is pullbacks or buying opportunities. I don't know whether I really want to get too active on the short side. If anything, what I want to see, and I like this now, is I want to see the algo put in a nice polite W. If anything, what I want to see is I want to see the teal get down into this oversold zone like we had here. When this happens, then I can actually start getting bullish. But while the teal is actually still sloping down, I think probably the best thing to do is cool your jets. So, all right. I think we'll probably leave it at the summary at that for the day. It's going to be a wild ride tomorrow. If anything, we've been of late putting out a live video with the Fed announcement and just doing a nice matrix of all the different markets we like to follow. Bitcoin, gold, Dow, all that kind of stuff. And so if anything, we'll make reference to that tomorrow morning in the public broadcast. But if you are interested, maybe join us for that. And today is Tuesday, which means that the architect of this whole website, keep in mind, there's no way. And if any of you know me, you know my 1980s website. What do you think, Stuart? Were you impressed with my 1980s website?
It was pretty stable. I was impressed.
Okay, well, that's not bad. I'm sure there was probably that saying, hearing. So, would you say that it was anti-fragile?
Anti-fragile, yeah, that's a word that we didn't hear a long time.
Yeah, actually, I heard somebody talking about that book again, so
cool.
That's why it came to mind. Anyway, so the architect of the rationalinvestor.com and the person who's helped me bring my 1980s website into the 21st century, Stuart without the T. He's going to be joining us here for the after party here today with his report from the center of the universe. Where exactly is the center of the universe? Let's see if Chris knows that. Chris, do you know where the center of the universe is?
I don't want to go over 2, so I'm just going to refrain from
This isn't an opening range trade. You could go for 2. It won't cost you. Anyway, we're going to get a report out of Breda, the center of the universe. All right. Okay, have yourselves a great day, everybody. PMA for the win. Slow and steady wins the race. Keep in mind, not a good idea to take big bets ahead of the Fed. Let's all head on over to Pancake Land and Pennacook. I beg your pardon, Pennacook Land. And we're going to listen to the comic stylings of Stuart in the Daily Brief After Party. All right, have yourselves a great day. All the best. The only thing left for Brian to say is bye for now.